Hello and welcome back to today's personal finance show here on Dublin City FM with me, Paul Merriman from askpaul.ie. So there's been a lot of movement in the mortgage market over the last couple of months, and we've also seen the last 12 months a new entrant in the marketplace called Núa Money. I'm delighted to be in studio with Mark Watson, who's CEO of Núa Money, and also Fergal O'Leary, who is the Chief Commercial Officer. Gents, you're very welcome to the studio.
Thanks very much, Bob.
Yeah, thanks for having us.
It takes the time to get into me as well. I'm really looking forward to this. Most of my listeners will know that I'm going to have to say anti-Irish banks in relation to service rates and 2007. But anyway, for today, I want to concentrate on Núa Money and what you guys, I think you guys have done a phenomenal job of coming into the marketplace and hitting a few sucker punches straight away in relation to how good your products are. I know we're here to speak about one product in particular. Before we get into that product, for listeners that mightn't know about Núa Money, what Núa Money, in my opinion, have done since they've come in, which is great, is you can have a 40-year term if needed and suit your financial plan. And as a financial planner, I love when clients have options, especially to keep their cash flow straight. I love the overpayment on a fixed rate of up to 10% of the value, rather than limitations. If you look like Bank of Ireland, there's 10% of your repayment amount, so a lot of flexibility for clients there. The demonstration of the kind of repayment capability isn't as strict with you guys from the lending criteria, which makes it easier for people to get on the ladder as well. And also you're given a little bit more, 10% extra on income to the kind of professional people, or people that are nearly the end of kind of degrees into professionals. But can you first please explain, after that sales pitch for you, can you first please explain what is the difference between Núa Money and the traditional Irish banks, AIB, Bank of Ireland and Merriman TSB, just for listeners, and we might start there.
Let me have a crack at that one.
Do, Mark.
As a new lender, there's lots of challenges in trying to build a mortgage business and build yourself as a mortgage lender. But there's also lots of opportunities. And the way I think about Núa Money is there's two main aspects of the business which are combined in many ways. The first part of it is our digital capabilities. As a new startup business, we've really taken advantage of the latest technologies. We've built them ourselves. We've thought about the mortgage process from front to back, end to end, soup to nuts. Really from the way that a customer interacts with us on a website, through the application, through the broker, how that broker interacts with us, how the underwriting process has been digitalized, that makes you quicker, and then how we can actually close that mortgage quicker and digitalize the closing process. And then at the back end of it, how you as an individual can service your own mortgage, and the way that you can access information about your mortgage through the portal or through an app ultimately. That capability, because it's brand new, sets you apart from other lenders in the marketplace, because it makes you more agile, it makes you more flexible, it makes you more responsive, and ultimately you can service customers better. But it's not just that, it's a combination of, at the end of the day, of putting good mortgage product. Because at the end of the day, we are a mortgage lender.
Yeah.
And that digital channel is very important, but your products are very important. And as a new lender coming into market, there's no point in us actually just trying to come in with the same products at a worse price than the existing lenders in the marketplace. You've got to think about what you can actually put into the market. It's going to make a little bit of difference to borrowers and how they can access product and how that product can suit their needs better.
Okay.
And we've done that across a whole range of things, tweaking traditional product in different ways that give people access, or a little bit more money, access to product quicker, or being able to extract equity out of houses, out your existing house quicker and more flexibly than other lenders.
Oh, I mean, you're up to €400,000 extra at least without much paper, like as in much evidence we're trying to get for an extension or a big job in the house. I mean, it's actually, I'm going to borderline say torture trying to do it through a traditional lender. Yeah, actually, it's next to impossible.
And the bottom line is that we don't actually need to know what the purpose of that is.
Yeah, exactly.
We're totally happy people want to.
Well, they want to do exactly for their own reasons. That's their own business.
Exactly.
Yeah. No, and again, I think that's phenomenal. And can we talk about rates then? Because Mark, I know you talk about the product, which I think are phenomenal. Obviously, the rates are a little bit different than what you see at the high street, but you're paying Núa really for is that flexibility, that new mortgage, that kind of 400,000. So I think, in fairness, I see this with clients all the time, especially from a stressful point of view, they don't mind paying more if the stress is less, especially when it comes to mortgage products. So can you just explain to the listeners why you charge more. It's how you really get your money, isn't it?
Exactly.
How a bank would get their money, like an AIB bank or on the PTSB.
So like other non-bank lenders, we're wholesale market funded.
Yes.
And what does that mean? We have to go to capital markets ultimately to secure the funding that gives us an ability to lend money here in Ireland. And those conditions in those markets vary a fair amount. And you don't benefit from a large deposit base, a large lazy deposit base that the banks actually have. So
I'm glad you called it a lazy deposit, because that's what they are. We've discussed this many times on the show. So goes against what Mark's talking about there, is that how much Irish banks have literally sitting on deposit at 0% rates. It's literally free money that you're leaving on deposit with them, and they're using to lend it out, whether it's for a mortgage, a credit card, a car loan, etc. So they have a big advantage over you in that they got cheap money, basically.
that is
They effectively have 0% interest rate
Yes,
on that money,
on that money, yeah.
which is totally different to what we have.
Which they shouldn't have, because they should be passing that on. They should be passing what they're getting from the European Central Bank on deposit rates to the Irish consumers, which is what's my biggest problem with the banks are. Okay, so we know it's a bit more expensive to you, but for going to you, we're going to get a much faster service, a quicker service. Actually, I think one of our approvals came back under 48 hours. I've never seen anything so quick. It was ridiculous. It was unbelievable.
Well, we actually turn around most within 1 day.
Yeah.
Actually,
I think Shane's going to shoot me. I think it was 24 hours, actually, not 48 hours.
our record's 6 minutes.
Wow.
And that's from application to fully underwritten loan offer.
That's unbelievable, yeah.
But that's where building your own technology, building your own flows, having and actually improving and iterating them over the last few months as we've been in business enables us to do that. Now you can't do that. It was always a perfect application with no complexity in it whatsoever.
Yeah.
But once you can gather that information, assimilate it correctly, you can actually do that underwriting process very, very quickly.
Okay.
And that is a big advantage.
It's a massive advantage. Yeah, it's great. It's really
because
good.
that's, you talk about funding, we're at a disadvantage. But actually in building those flows, we're at a massive advantage.
And I think that is so important to people in today's marketplace as well, which is a quick moving marketplace. I think, slow moving, so you need to be quick when something comes on the ladder to get yourself sorted. I think it's great. Guys, before I suppose, we're here really to talk about the Freedom product. So you guys have released a new product called the Freedom product. And I've already mentioned how good the products are that you existently have. I want to start by saying thank you. I genuinely mean that, because I think our job at Ask Paul over the last kind of 8 years, we tried to put the consumer first, educate the consumer, and we've gained the trust of the consumer, and we built a successful large business on the back of it, and we're very grateful for that. But the biggest bugbear of mine has been the fact that so many consumers are mortgage prisoners because they're abandoned by Irish banks or banks that left the country, and they ended up at typically like a Pepper, and they're looking at rates of 7, 8, 9, 11%. And no one will take them on, especially if they're in a split mortgage or they have more mortgage partner side. Can you bring me through, or I know the product already, can you bring the listeners through what you're doing? Because I will say, number one, thank you for all those consumers. And guys, before we even get into this, if you have a mortgage that's a variable rate mortgage, and it's in somewhere like Pepper, and you feel like you're a mortgage prisoner, you need to listen to the next few segments of this show, a few minutes of this segment, because this is probably the most valuable information you're ever going to get, and it's your out of jail card that you need. So very good. Do you mind bringing us through that product?
Sure. I mean, the new Freedom product came about by basically we got a lot of reverse inquiry from borrowers who were basically saying, well, I'm in the situation of a split mortgage, and what can you guys do? Or can you guys lend on something like this? So we kind of thought about it long and hard and said, look, there's a big cohort of people out there.
Massive market.
There's like 40,000 plus people out there that are good on their repayments, on their restructurings. And what we've come up with is a product that is, once you have an alternative a repayment arrangement that you are clean on for 5 years,
yeah,
and that you've met all the terms of the agreement,
sure, yeah.
We're totally happy for somebody to come in and they can refinance with us. They can if it's a split mortgage, they can refinance both the bit they're paying back and the bit that's parked.
Okay.
And that basically means if obviously with the house price appreciation that we've seen over the last few years, the house price index basically is back above the peak since 2022. Go back to the financial crisis. So a lot of people who are in negative equity are now in positive equity, and there's a great opportunity there for them to to realise that.
And if somebody moves over from the split mortgage and that piece is in the cloud, they have to put that on the capital interest piece with you guys. So it's the time for them to get real with it as well. But they can also extend the term a bit longer than they were. So again, you might have someone that has a 25-year term or 20-year term left because they took the house out maybe 10, 15 years ago, or even 15-year term left. They have a split mortgage and the cloud is never going to get sorted, you know, and there's a risk of the house being sold and they return, they have no income coming in. You let them lend up to nearly 75 years of age. Repayments mightn't be too far. Sorry, they should be nearly cheaper because the rates are going to be much cheaper than where they are, you know, with those variable rates.
Yeah, our rates on that product are 5.25%.
5.25, yeah. But again, I've seen people paying 8, 9, even 11% here. So it's a massive saving and a massive chance for them to get a financial plan in place that actually clears this mortgage before the exit. Otherwise, the cloud is hanging in the background forever, which is
I think that's actually
I
think that's a really good point. Is that the time is now to actually do this, and actually those borrowers should be motivated to do that because, as you said, they're running out of time on their existing mortgage. They've got something hanging over their head.
Yeah.
This gives them an opportunity to fix this tomorrow.
Yes.
Not
exactly
5 years
last
down
minute,
the road.
Yeah.
But one of the reasons you should really do this now is this whole point. You have 250,000 house is probably not worth 400,000, 500,000 now.
At least,
so you've actually got 200,000 of positive equity there. You probably didn't think you had 5 to 6 years ago. You can get back in control of that by taking one of these mortgages out, one of this freedom out. You can sort yourself out and get your payments up to speed, and you're cleaning your credit record at the same time.
Yes.
So I think you made the point when you introduced the last week that actually 2-3 years down the road, you can go to any bank.
Yeah.
And even if you look at this as a stepping stone, you know, it's the right thing to do.
Yeah. And like I said, I will say thank you because, you know, I'm not trying to just blow bouquets at you because you're in the room today. And I know we've got loads of different guests on the show, but I've been honestly banging my head off a brick wall and how unfair who the Irish taxpayers who bailed out the banks, and we've had government or revenue sitting on the boards of banks and just saying no to all these people, and they've been left with 40,000 people just left dry, left to hang. And I think it's deplorable because we've had those people in here for consultations. They're crying, they're upset, they're nervous, they don't have any future security because they've been abandoned by the banks. That's all that happened. It wasn't their fault that they went into arrears more than likely after a financial crash, but it was definitely the fault of Permanent TSB that transferred them, a Bank of Ireland or AIB or Bank of Scotland that left. Nobody looked after these people. So I will genuinely say thank you, and I think what you are doing and having and obviously I know it's commercial, I know the 5.25 is higher than the traditional banks, but they've been abandoned by those banks. And if you can offer these people a solution, and as a financial planner, we want to be able to help our clients and be able to bring really good products. And I say this to clients all the time, you've got a world of financial products out there, whether it's a mortgage, a bank account, a credit card, whatever it is. And our job is to find the best product for those 40,000 people. And if anyone's listening to the show and you know someone, it's not you know someone that has one of these mortgages or it has been under stress in the past, please, please, please make sure to hear this interview and they reach out, head over to Ask Paul and look at the new website, get all the information if you want it. But you need to take action. You don't need to be wasting all this interest to the likes of a non-bank. Now, like it predominantly is probably Pepper and Mars Capital that are left at this stage, or the book. There's no need to be paying those interest rates because they're extortionate. I think it's the worst thing that's happened in the banking system, not the tracker scandal. This is worse for those 40,000 people, in my opinion. So fair play. I think it's a great product and it's great to have you on talk.
Well, we appreciate the opportunity to get the message out there, actually, because I think one of the issues also is people don't know that there's a new solution in the marketplace. So it's really important that we get the word out there, and we'd appreciate if everybody can go talk about it, because I think everybody will know somebody.
Everyone has to know somebody that's in that situation. And again, I think this is another prime example of why I always say don't just walk into your own bank, whether you're getting a new mortgage or a remortgage or a difficulty, because a bank can't offer you another bank's products, obviously, because they work for the bank. And that's the whole reason Ask Paul exists. And in fairness, other mortgage brokers out there are doing a really good job as well. We exist to make sure we can bring our clients the best products to get the best financial outcome for them. So yeah, I think this is one of the most exciting products I've seen in the mortgage industry, because it's there to help. And I know obviously you're going to make money as a commercial business, but it's the first problem-solving mortgage I've seen, to be honest with you, in 20 years.
And just to be clear, we only operate through brokers at the 100% through brokers at the moment. We hopefully later on in the next 6 to 12 months we might have direct, but at the moment, so if somebody has something to do, please come through the broker channels. All of the brokers that are set up with us are on our website, nuamoney.com.
Exactly, and or else we can just head over to askpaul.ie and get a consultation. But guys, sorry, I will say, I think it is phenomenal. What is next for Núa Money? Because you've just really come in with a bang. Like I said, you sucker punch the banks, in a big way. I think it's great for competition, especially if you look, you guys came in after KBC and Ulster Bank had done a sidestep out of the marketplace. So it's great. So what else is coming up that you can tell us about? Well, you're both smiling, so there's obviously something.
No, it's
back in studio in a few weeks.
Look, we've only really been in business for 6 months.
Yes.
And we're really pleased with the amount of business, with the amount of traction that we're actually getting. We're now dealing with 120 plus brokers, so all your local brokers will have access to all our products. We've built this digital closing portal, which for those of you who are getting a Núa Money mortgage, you'll find it a lot easier and a lot quicker to close. We have people closing their mortgages at the weekend using the digital portal. So we've done quite a lot already. We're working on expediting our underwriting process using more technology, and using AI, and we're building that capability right now. And as Fergal said, at some point we'll build a direct-to-consumer offering so that people can access in whatever way they want. But as we learn more about the market and we get the inquiry, we think about almost on a weekly basis, should we build a product around that?
That's what I love, because the banks have this kind of lazy, I suppose, approach to the marketplace, and they're that big. They don't need to look for a new business to be fair to them. They don't have to be creative. And I noticed this years ago, actually, even like I'm talking about 10, 15 years ago, Ulster Bank and KBC were always the ones that kept the Irish banks on their toes, because they were the ones that came. I think Ulster Bank were the first one with that 2.3% rate back maybe 7, 8 years ago. And then all the banks had to come down, because in fairness, Ulster Bank had got a good foothold in the country, as did KBC. So it was always those banks leading the charge. It was never one of the 3 pillar banks leading the charge on rates. They were always following. And you can see them doing the same now again with different competitors in the marketplace. So it is brilliant. Guys, just before we go, can we talk, because we're talking about freedom for people that are mortgage prisoners, basically, with the likes of Peppers or Mars Capital or those type of places. Let's talk about first-time buyers, if you don't mind, and just talk about the professionals, the 10% extra that you give them, and also the demonstration of the repayment, because this kills me with clients. And I can feel clients' frustration. You think they're paying a mortgage for X, Y, a certain amount for 5, 6, 10, 15 years. They might have a car loan, they might have whatever else going on, that they go to change their house, and the lenders go, no, because you haven't demonstrated your repayment. And so we've got like $3,000 going out a month, and we don't take this into account, we don't take that in. It's nonsense. So you guys have cleaned this up by just saying, we trust that you're going to have you're adults, you're working, and you're going to pay your mortgage. That's really what you've taken into consideration, yeah?
Yeah, I mean, the bottom line is that this proven repayment ability or demonstrated repayment capacity, or whatever people call it, we kind of looked around Europe, and kind of Ireland seems to be unique as the only country that has this, and it just seems to be kind of unnecessary, for first-time buyers in particular, that they have to kind of scrimp and save to save the money in the first place.
While house prices are going up in the background.
Well, I think that's a really important thing. Accessing a mortgage quicker is going to save you a lot of money
100%,
than rather 50 basis points more on the mortgage risk. It's if you think about it, if you're buying a house for $300,000 or whatever, and it's going up 10% a year, you wait another year, it's the $30,000 more.
And you know what I hate about that demonstrated capability is that when something goes wrong in someone's life, like the car breaks down, or something's wrong with the kids, or they're off sick from work, and it might be sick, it ends up in a situation where you have to start the repayment capacity again. So they could be 5 months into saving, and now they're back at square one, and the bank says go back, and they cheat them.
I think
it's outrageous.
That's exactly the point. That we don't think that gives us any insight into how somebody's going to be able to repay that mortgage over the next 30 years, what they've done in the last 6 months.
Yes.
Right? You have to look at the affordability, how they live their life. So if you're not buying a car, you're not going on holiday, you're not going to a restaurant for 6 months, that doesn't tell me what you're going to do after you get the mortgage. The majority of
people are going to, if they're going to pay their mortgage, they're not.
Absolutely.
And that's the antitrust. And I wouldn't mind the antitrust that the banks have brought in my opinion, with the consumer, is over the reckless lending, not over the reckless borrowing necessarily, or not necessarily over people's lifestyle. I mean, it feels like the consumer, until you guys came along, have been punished for the financial crash through austerity measures, through their pay packets, through taxes, through property tax, you name it, everything that's gone on the last 15 years. and yet you can't go get a mortgage off the bank because you haven't saved over 3, well, you took a little bit out of your savings.
Well,
It's absolutely mental.
yeah. Look, you've got to make sure that you're given an appropriate mortgage. That
Of
you're,
course.
Right.
Yeah.
And that's the bottom
That's up to your underwriters and the professional underwriters to know.
And so we've got a good team of people. We've got a good process. We've got strong credit policies. We're very rigorous in how we do that, but we're much more flexible in how we think about it. And I think that is the key. What that gives you as a first-time buyer is an ability to get that mortgage quicker, which we think actually is a big cost saving, even though we recognize our rates are maybe not the best in market.
Yeah.
So I think that's a feature which we're seeing, again, some good momentum in people coming into us.
Yeah, no, there's great momentum, and I think it's been phenomenal what you've achieved. Okay, so you're not going to tell us what the future holds. You're telling us that you're very happy in the Irish market to date. You've brought out some really exciting products. Tech is flying. The team is brilliant. 6 minutes for an application
Is our record.
is a record. We're saying it was, pretty sure it was actually 24 hours. He got our first one in with Shane, to be fair. So guys, I think for the interview, thank you for coming in. And honestly, I will say, for the freedom product for those mortgage prisoners, I think on behalf of Irish consumers, thank you, because no one else was doing it. And that is a very distressful place for people to be. So thanks for your time, and thanks for bringing in innovative products in the marketplace that were needed.
Thanks very much, Paul.
Yeah, thank you.